So what about the advantages of such a system? Well, I think there are lots of advantages of doing taxation this way. Firstly, it's painless. We've already seen a 2% FTT on credit card transactions. People didn't in the UK didn't even know they were paying them because the government didn't force the companies to reveal this. When you make transactions and some percentage goes to the government, you don't even know that it's happening. And there's no paperwork to do, no tax returns, none of the really messy stuff that people hate. It's painless. It's also extremely cheap to implement. I mean, it's literally just a line of code in the computer algorithm that does the transaction, just sort of multiplies the value by some fixed number and pays that amount to the government. Easy. There are no tax authorities, no tax inspectors to pay, no complication. No cheating either. It's very difficult to avoid paying these transaction taxes. Try not paying the 2% charge when you buy things in a foreign currency. It's just very difficult to do. So I think that's a big advantage. And it will effectively eliminate at a stroke all these loopholes and what we call in France the niche fiscale, these ways of avoiding paying taxes that people use so successfully, which give this enormous advantage to people who are wealthy and who can pay their tax advisors to find ways of avoiding tax. And it will also be an end to lobbying for tax breaks. In the States, you've got hundreds of lobbyists for every representative, all trying to get tax breaks for their own particular sector. There would be no more tax breaks. There are no taxes that you can reduce. You wouldn't give a lower rate of FTT to some sector because the lobbyists are telling the government that they're more important than somebody else. Everybody pays the same thing. And that means actually less, or in fact no, corruption of politicians. You can't pay politicians to favour a particular sector with a tax break if there are no taxes being paid except for the transaction tax. And that means actually that state support for particular sectors, for instance, agriculture, industry, would be directly visible. It would be no longer a case of giving a tax relief on particular activities. It would actually have to be money going from the government in the form of real subsidies to particular areas. And I think it would be much less easy for people to argue that we need to have a big subsidy rather than we need to have a big tax break. It would also eliminate money laundering and lots of other illegal practices which are currently rife in the system. All this money that's being channeled through offshore tax havens in the Channel Islands and the Caymans and everything, all of this would disappear because all transactions would have to be going through an authorised and tax channel, and so would be available for inspection by the police and so on. And it finally it also gives it a completely level playing field. That's to say, currently multinationals just simply often pay no tax or very little tax because they declare their profits in the places where the taxes are the lowest. They have a huge advantage relative to a locally based national company which has not the option of paying the taxes in principle somewhere else. And I think that's a very, very important thing. The whole system is currently skewed in favour of the multinationals, the big oil companies, Google, the banks and so on, whereas small businesses are having to pay excessive levels of taxes relative to the others. There are some other positive spin-offs, I think. One is that tax havens would actually become irrelevant. Since there's no corporation tax, income tax and whatever to be paid in the country that has imposed this system, what's the point of moving money to the Cayman Islands? There's nothing to buy there. You'd be better to leave your money in a place where you can actually do something with it. So that, as I mentioned earlier, tens of trillions of profits are currently hidden in tax havens, and that money could be brought back into the economy and used for doing something sensible. And that would give a massive boost to the economy. Another interesting feature is that the abolition of VAT would produce an interesting, would favour short supply chains. Under the current system, in France, for instance, you pay 19.6% tax VAT on goods wherever they come from. So tax goods imported from China, which would be taxed at the same rate as goods produced locally. Whereas under the proposed system, the total tax paid on goods imported from China would be, let's say, 0.1% of all the charges, including transport and distribution costs, paid at every level, every link in the chain of production, from production in China to distribution in Europe. Whereas the total tax to pay on goods produced locally, the guy who makes his stuff himself and sells it in the local market, would just be 0.1%. And so that would favour short supply chains. This is ecologically sensible. It's not sensible to import food and stuff from the other side of the planet when we can produce stuff locally. So what are the problems? Well, some people would say that one problem is that people could avoid this by using cash. And in a sense, that's true, but I think it's really a minor problem. Cash payments are actually currently a tiny fraction of the total amount of transactions going on. And using cash is just too risky. I mean, you're not going to go and buy a car with cash. It's just too risky to walk around with, thousands of euros in your pocket. One way of avoiding this is just to have a higher tax on cash withdrawals. So, if you might have a 0.1% tax on electronic transactions and a tax which is five times higher on cash withdrawals, to make it just not particularly interesting to do this. But there's actually another perfectly viable possibility, which is to switch to a cash-free economy. In France, we have a thing called monio cards, like credit cards that you can recharge in a bank machine and use it to pay for small amounts of money. You can buy bread and cigarettes and so on with these cards. And this could be made universal, but you can also now use mobile phones to make payments. You wave your mobile phone at the cash register, and it debits your account directly. So this is actually perfectly possible. Within a few years, if it was decided, we could switch to an entirely electronic transaction economy. But I think there's another thing that you could do that would really encourage people not to use cash, and that's to pass legislation which would mean that only electronically validated transactions are legally binding. So, for instance, if you bought a car with 10,000 euros in cash, it wouldn't legally be yours because there was no way of proving that you made the payment. So this is actually the reason why share purchases in the UK, which have a 0.5% stamp duty applied to them, still work, because you can't buy UK shares in UK companies without paying the stamp duty. You're not legally the owner. And the same thing could be done for making electronically validated transactions compulsory if you actually want to transfer ownership, for instance. Another potential problem, you might say, is that we could avoid using money and electronic transactions by using barter systems. So, for instance, local exchange systems could avoid tax. When people use a let system, or in France, the SEL, Système d'échange local, they would, in principle, not be paying tax. If you trade 3 hours of gardening for 2 hours of looking after somebody's kids, there's no tax to pay. But I think this is actually a good thing. I think we should be increasing local cooperation, would make the system more efficient, and should be encouraged. It's a minor problem anyway, so I don't think there's a real issue there. A lot of people, including the UK government, say, Osborne and Cameron, they say, well, yeah, transaction taxes are perhaps a good idea, but they would only be possible if every country and every single rock in the Atlantic switched to impose the same value everywhere at the same time. That's just not true. The reason is that any country could implement this switch from one taxation system to another on its own. Imagine the first country that actually abolished corporation tax completely and replaced it with a transaction tax. That would mean that the trillions of dollars of profits that are currently hidden in tax havens could be legally brought back into that country. That country would have a huge advantage. Many companies would be relocating their head offices to whichever country did it first, because they could then legally declare their profits and use them without paying 20-30% corporation tax. And imagine a system in which there's no income tax, no health and employment charges. It would be cheaper to manufacture goods in that country than anywhere else. Even China wouldn't has to companies pay taxes on their profits. Imagine France doing this. It would be potentially cheaper to produce cars in France than in Morocco or Romania or whatever, because you could eliminate the charges associated with productive industry.